Hi, Warriors. Good turnaround Tuesday. How are you, Bran and Paul, Sinatra, team, Ryan, Kman, Patrick, Laura, Ingmar? So I want to start off with Kman. Good morning, buddy.
Hey, good morning, Dale. Good morning, everybody.
So the dollar is showing more relative strength against U.S. dollar yen, with Dixie taking out last week's lows by I don't know how many pips, but took it out while US
Yeah.
dollar yen is putting in a higher low. Could we be setting up something like this from here where equality would take it to, I don't know, 50 and a half?
You know, as I said also yesterday, a lot of it will have to do with the month end right now. I mean, the whole market space is full of people calling for heavy dollar selling into the month end. I'm going to trade with a with an eye on the clock. And going to tell you about dollar yen, I really don't know because it could really end up anywhere. Personally,
Okay.
I don't see too much of a reason to go sell yen right now, but then there is the dollar side. Also with an eye on the month end because the Nikkei had a pretty good return, the bonds returned pretty okay as well. I really it can go anywhere.
Okay.
Yeah,
Any
I wouldn't be
conviction?
surprised if we see 147 and a quarter or 150, to be honest.
Yeah, so it's an either or. It's a
Yeah,
coin toss trade.
yeah,
Okay, well, I'm kind of counting on that happening because I'm taking a shot at the short side of metals today,
okay.
and that would help. So
Hmm.
anyway, how about euro? It's like Groundhog Day every day. Every
Yeah,
I wake up,
exactly.
it's 109.50, 109.50 for forever.
Yeah, there's still that big level around 109.60. We tried it again this morning. There's definitely end of month stuff going on. Also there, people are expecting large dollar sales, so sooner or later to for this level to get taken out at least until the end of the month or so, or tomorrow. I again, I mean, I'm having very little in it right now because
Okay.
when there are such a big calls, there's likely going to be a very decent amount of front running already going on.
Yeah.
And come Thursday, I wouldn't be surprised if we flip around the whole thing and we find euro dollar under 109 after all.
Yeah.
Yeah, if we get all those dollar sales, and again, if we get all those dollar sales and we put a fresh high on the euro dollar, I think it would be enough for this round. That's my
Okay.
view. My
Yeah, we
view.
just missed it. Last week it was 65. We've been to 62.
Yeah,
Cables, also, kind of acting a little negative here today, weaker
today.
than euro. Any feeling there for a correction,
Yeah,
pullback?
I think it can, especially today, trading value date end of month. It can correct a little bit, and all of them, I think. But then I'll probably be looking if we get that 125 and a half or below, anywhere between 125 and 125 and a half, I may get interested to perhaps try to catch a knife or at least a small one, a pocket knife.
Okay. All right. Ryan, how are you, buddy?
Yeah, hey mate, how you doing?
Yeah, you have anything to add to K-Man's neutrality, pretty
Yeah,
much
not
with the
much.
board here?
It's feeling like you're looking at cable, and that's doing a similar to euro dollar. It's just nudging the highs, but not able to get through. So only two things can happen: either it breaks up and we see another leg, or longs up here get a bit panicky and they start exiting, and we see a deeper dip. I think you've got to keep an eye on 10-year yields right now. We've got a pretty tight range between former resistance at 437.38 and 450.
All right. So what
that's-
Ryan's talking about, people, is this going all the way back to these levels.
Yeah.
And we talked about this, you know, the whole team, that would be a logical place for the first wave to go to prior highs. So we've been there, haven't we?
Yeah, we've been there. We've tested it twice, and we can't get back up through 450. So it's a very, very tight, coiled spring we've got here, 450, 438. And as we know with yields, they don't stay tight for long at the moment. So something's got to give, and I think that's going to decide potentially what the dollar does. I would favour just sitting here right now, the way the price action is looking at yields break down through that 437 area, and then that's probably the kicker for euro, dollar, cable, etc. to leg up again.
Okay. Anyone see the beautiful full moon in the last 2 nights or morning?
Yeah, right.
Yeah, you see it?
That's the last thing I would want to see is your full moon, Dale. Last thing. I don't even want to go there.
You can get arrested for that, Dale.
I had mine removed, Blake, so it's not possible.
No, that happens
truth.
with age, Dale. What happens?
No,
it
happened with
disappear.
No, it happened with cancer surgery. Anyway, so anyway, that's my excuse. I hope it's valid. And anyway, S&P's a little pressure here this morning. Are we going to get to 4,600, or is the full moon going to stop this advance? Maybe even your full moon, Blake.
No, I don't know.
What do you think? Worth a shot on the turnaround Tuesday?
Well, you said it's turnaround Tuesday, and since it is Tuesday and it's turnaround Tuesday, maybe it does stick.
I did notice a couple of things in some of the Magnificent Seven that, you know, I follow all the time now. So, for example, here's AMD, you know, even short term, the divergences up here are pretty glaring. Here's the 4 hour. Okay. And then here's Amazon. Same thing. That kind of looks like a 1, 2, 3. And then Microsoft was really hit the cover off the ball in the last few weeks. And look at this. I mean, you know, the best divergences are the ones that you don't have to put up your cursor to see what the reading is. It's, you know, pretty obvious just looking at it. So there are a lot of divergences, and what really led us, you know, this was the explosion, because the equal weighted S&P didn't do anything this month. So
I got a chart to show you talking about the equal weighted S&P.
Okay, cool.
We just posted in the chat room this morning. So
all right, yeah. Well, go ahead and grab it. You know, that's pretty much it. I see some fades here today, and I'm thinking the dollar rallies. Maybe, you know, I'm hoping for a rally for better levels to buy. You know, to buy euro at maybe, you know.
Yeah, well,
107.50, 107.50 looks attractive, since, you know, 102's off the table now.
Yeah, I do think it's you think 102 is still off the table. So
it's off the table. Yeah.
At least near term, I'd agree with you. Yeah. You know, point out, and I want to talk about this. Well, first, I guess I'll just take you guys to the ForexAnalytix chat room and go to the S&P room. So you can see this is the equal weighted chart of the S&P, and notice how we're just stalled ahead of the 618, right? And you know, you can see the relative strength is a little divergent here as we head up towards that fib, and you know, here we are kind of rolling over this morning, and a couple other things that have my attention here. And let me move that back over here. If you're looking at like the Canadian, and because we got a comment from Forex Trader, he is asking about the Canadian and why it's so, you know, dollar CAD so weak. I want to share with you that we're really at horizontal support, and this is providing, a good level for longs. I mean, you can see how intraday we just reached oversold, divergent relative strength right into support, and as you can see, it's offering good levels for people that want to be on the long side. But it's not just that, because if you look at the dollar Norway, very similar type of situation where you have divergent relative strength. We hit the 1060 level, and you can see that divergent relative strength should allow for a bounce. And if you go to yesterday's support in the US dollar Norwegian krona, 1060, as you can see right here, is really critical support as well. So
that looks better than Canada.
It does, but you have to take all that into account when you look at crude oil. So crude oil, I think it's holding support here at $74, which is this inverted head and shoulder pattern. Nice. Neckline or potential triangle. But we also have an OPEC meeting, and you can see that the ceasefire right now has been pushed back, fortunately, for a few more days, and with OPEC coming up, and the markets understanding at least one of the reasons why the crude oil markets really weakened is it's taking that risk premium out of what's happening in Israel and Gaza, and I mean, this is a setup for a reversal, but doesn't mean we have to reverse. We get below $74 and crude oil is going to weaken a little further. And you can see the US dollar Norwegian krona is taking note of that right now. And it's been strengthening intraday pretty good, since the European hours. You can see it just taking off. Dollar Canadian's, taking its cues here as well. So I'd be watching crude oil, because if crude, weakens back below $75, that's going to just further allow the dollar CAD, dollar Norway to strengthen. And then you got the euro, which continues to reject this 618 retracement. It's a real big level, and we were talking about it in the chat room just a little while ago. And I think I'll just show you guys some of the conversations here. DK was just saying about the stops, like, just let's hurry up and get these stops done, because it's it's just a matter of time, and we're just all kind of waiting around for it. I don't know where his comments were. They were somewhere in here. We were just talking about, right here, can we please get these obvious stops done ASAP so we can move on? And I think the whole market's just kind of waiting, as far as the dollar goes, for the stops above the 106 or 109.60 level to get done in the euro, so we can kind of move along. Let's just go ahead and try to reach for 110, and then show us what you want to do from there. But I don't know, the longer we sit up here, the more the risk is that we don't break out. It's really, you can see how the euro's just been struggling here since last week, and now the dollar's starting to pick up against other things too. Now, we do have a few things that are happening today. We do have, obviously, we've got consumer confidence that's coming out. We have some house price index, which, should be dropping, you would think. We also have Richmond Fed manufacturing data that's coming out. So there is some U.S. data that could move the needle. But overall, the market's had a fairly subdued night. And I want to ask Kman, and I want to ask Ryan, you guys just got off the Flow Show a couple hours ago. What happened in Europe that really stuck out? I mean, we had, like, in Asian trade, we had the Aussie retail sales came in weaker than expected, but Bullock, she came out and she had some fairly hawkish commentary. But what's been happening in Europe that we need to really be paying attention to? Any thoughts here, Ryan?
Nothing. That's been,
you're no help. You're absolutely no help.
He calls them like he sees them, man.
Seriously.
I'll tell it as it is. We had a little bit of fun and games in dollar yen over Asia into Japan. Maybe some month-end flows nicking it under 148, and then we had some Bank of Japan CPI, core CPI data that dropped 4 pips, which sort of plays into Ueda's rhetoric. So that helped it on its way back higher. But everyone's just watching this damn euro dollar to see what it's going to do at this 109.60. If at some point, if it goes along enough, some short-term longs might give up, and then we see a steeper pullback, maybe down to the big figure. But otherwise, the fact that it's not dipping too far suggests there's some pressure there. So if it blows, then it could be 110 pretty quickly after. So you've got to position yourself. I'm in with some small buy stops at 109.70 just to try and catch a break if it happens.
Yeah. Okay. Well, I mean, that makes sense. Wait, hold on real quick. AJ writes in, dollar CAD is strong, maybe due to OPEC possible oil production cuts. Yeah. I mean, that's the speculation for Thursday, right? Like, how do you deal with the supply issues if you're OPEC? You cut production, and we'll see. We'll see. I don't know. Kman, what are your thoughts? What's happening through European trade?
Yeah, it could become a funky funky Thursday if the OPEC decides something and we are trading right on end of month.
Right.
As I said, there's been so much noise about what has to be done. So much dollar selling all across the board. All models are calling for loads of dollar selling into month end, and I guess that some of it has been already front run, and also,
yes.
There's a couple of currencies standing out, but I think it's perhaps too early to counter trade this. But if we wouldn't have had month end, I would say like euro dollar is also starting to struggle. But the flows are what they are, and if they take us through these 60-65, perhaps some models will get some triggers as well. And I'm more of a spectator, barring my few crosses that I have on, a little bit on the Aussie still. But for the rest, I'm more of a spectator right now than anything else. I'd say keep an eye on that. You were talking about the Norwegian kroner. It's one of the currencies that could actually stand out into month end as well. So as I was saying on the flow show, I wouldn't be surprised if we have a look under that 1060, which is a decent level, which could then trigger a few stops perhaps down into the I've got about 1040 and then that 1020 as well. I'm just a spectator today. Maybe a bit of a dollar buying, and then let's see what happens tomorrow and on Thursday. Really,
it's it's interesting. You close right below the 200 DMA. When I was looking at this last night, I'm like, okay, well, we're finally closing. We couldn't close below it. No, we finally closed below it. I'm like, okay, I thought I'd get up this morning and the US dollar Norwegian krona would be a little weaker. That was my initial thought. And by the way, crude is coming under pressure. If you look,
there's just been a headline from OPEC Plus that talks of difficult and a further delay in the meeting is possible, and that they might just roll over policy.
Another delay.
Yeah,
another delay.
So obviously some bum fights being had there, and it's not looking good for oil on that front.
I am going to go ahead and do this right now. Sorry, guys. Sometimes you got to take it when you got it. And
taking some of your dollar CAD.
Yep, just closed out my dollar CAD
taking
longs.
Profits, bro.
Nope.
Good sniping.
Yep, you got to kind of do that along the way. That was the in the ForexAnalytix trades room. But anyway, I just want to take that off. We've got a market that's not really moving a whole lot, so sometimes you gotta scalp around. Wanted to real quick cover the dollar yen. One of my core positions is actually short some dollar yen, and they're not huge positions by any stretch of the means, but I've been sitting short since this move to basically the 50 DMA. I was up 100 pips last night. Now I'm only up like 57. So, I mean, we've seen a nice recovery. Now, one of the reasons why the dollar yen, in my opinion, has recovered a little bit. We held some horizontal support. You can see it right here, and 618 retracement. So, I think we might get another look at the 149.50s. I think it's entirely possible. I know that's, about 60 or excuse me, about 100 pips higher, 90, 100 pips higher than where we're at right now. But I think that's still the risk in the dollar yen. I think we're just making, lower highs. I know you were talking about this when you were a little bit earlier, Dale. I think lower highs, probably higher lows. This might be setting up some sort of consolidation in the dollar yen, moving forward. So I think that's kind of what we're dealing with right now. Like I said, we have some data coming out a little bit later today, but tonight we have the RBNZ. So the RBNZ is expected to keep rates unchanged. And then we have Australian CPI. One of the charts that caught my attention this morning, and I'll just kind of give this to you guys, even though, a lot of you aren't in the Forex Analytics community, is this Aussie Kiwi. You can see we're consolidating really nicely in a very, very tight range. And I'm assuming this range is going to be broken very soon. And tonight might be the night. We have Australian CPI, RBNZ. This is going to be the pair in focus. Guys, Ryan, Kman, do you have any thoughts ahead of the RBNZ? They're supposed to keep rates unchanged, but do you think it's gonna be a hawkish or maybe more of a stay the course hold, because they're gonna hold rates, whether they're hawkish or just keeping rates unchanged, and this is our new neutral rate. I mean, what do you guys think here?
I'm going to go RBNZ dovish hold, because the data have not been that brilliant of late. They won't start to cut right now. I wouldn't think so, because that would send a too strong a message probably to the market. But I'm going to go for a rather dovish hold, signaling that they may be where they want to be, and the next move is probably to the other side.
Could you imagine, Kman, if and remember, Aussie CPI comes in about 30 minutes ahead of this data. I mean, we get a strong Aussie CPI, and that happens with the RBNZ. We could be trading, closer to 110.
Oh yeah.
After today, if that is truly the case.
No problem at all. But the Aussie CPI is not really expected to go higher, right? It's expected to tick down. So we may be in for but yeah, we absolutely, if the Aussie CPI is sticky and the RBNZ comes in a bit dovish, this thing is probably going to trade 1% higher.
Yeah, I think the Aussie Kiwi is definitely one to watch for tonight. I think that's a really great setup. It's a nice consolidation. When you get a consolidation like this, the outcomes could be quite bullish, or bearish too. I mean, we could see the opposite happen, obviously, but I think this will be a good one. Ryan, do you have anything you want to add here?
Yeah, I mean, the only problem we got with New Zealand is the way they bring out their inflation numbers every quarter. I mean, if you just take the last numbers, they're still in the 5%. So I don't know if they'll be as dovish. I don't think if they'll be really dovish. They'd probably mention the stickiness. Unless they know, obviously, that the next numbers are really coming down, because it's similar to the RBA and why the RBA hiked. It just wasn't coming down fast enough. I mean, they peaked at 7.2% earlier in the year, and it's now only at 5.6% if the numbers I'm looking at are right. So, it hasn't come down too quickly. So that might keep them just keeping things a little more neutral to hawkish.
Got it. All right. Well, what's sticky is the 200 DMA on the Kiwi. It seems like the 200 DMA has been, it's like kind of been the resting spot for a lot of different assets as of recently, especially in the FX market, as all these central banks come to more of a neutral stance, or finding their terminal rate, if you will. Hey, just real quick, you can see crude is trying to break lower, and we're getting close to some support here. Some pretty pretty key support coming in right around. Let me just make sure I've got that, be a little bit more granular on my analysis here. I think 74 and a quarter, 74.30, 74 and a quarter, going to be some pretty important support for anybody who's bullish crude. So just keep an eye on it as we're making an approach there. Let's also discuss, Dale, maybe you'd like to throw some input in here. Gold, I'll tell you, and this is, I blogged about it yesterday. It was my chart of the day yesterday in our blog. If you guys don't know where to find it, it's just, on our website here. We held the 38% retracement, as you can see here, and we closed in breakout territory, and we're still holding in breakout territory here. Now we're obviously getting close to that big triple top that you can see up here in gold, but what's gonna be the driver here? I mean, gold looks bullish. Silver's trying to break. I mean, silver, you can see it's trying to hold its breakout, stalling at 161% extension. If you guys missed it, you think it needs the dollar?
It's the dollar. That's I think that CPI, that's when gold really accelerated. And gold can rally with the dollar rallying, but silver usually doesn't. So a bear market in the dollar is key to silver getting up to some of those targets like $38 and stuff like that. So it's all the dollar and the yen. I'm just I have a retest that would come in at about 1910, which would be about halfway back on this recent rally that we've had from 1810. So that's about, 50% pullback at 1900. Where is it on the DSI? If you want to talk about it, I don't get it anymore. I'm sure it's pretty high.
Well, Dale, you can find it in the newsroom here. Yeah, it's just right here in the newsroom. Let me go check what the DSI was overnight.
I just saw it. Yeah, there.
Yeah, I mean, crude oil comes in, where is it?
Gold's at 78 gold, silver 74. So, you're not going to find
they're
too
not
many
extreme,
Yeah, but you're not going to find really any bears. I don't know anyone who's talking the bear market side of precious metals anymore.
No, and gold did a lot of constructive work here. I mean, we held the 38% retracement, we held the 200 DMA, and now we're in breakout territory. So it's hard to be bearish right at this moment. For some reason, if gold slipped back below, like let's say the dollar took off and gold slipped back below 2000, I wouldn't want to be bullish anymore. But in order for that to happen, you'd have to see the dollar take off, and you'd have to see a little false breakout here, which
I also think silver could be affected if we get the kind of risk off move that I think we could get. So, it's all one market. When you think about it, there's really been no differentiation. I mean, when the dollar goes down, everything goes up. Equities go up, metals go up, everything goes up. So if the dollar's bad, it's hard to be short anything. Sure. So, anyway, but the dollar, might recover. And I think that risk off, if, has some velocity, and some people are right about a pop in the VIX, that could affect the industrial side of silver. So,
yeah,
Nick,
our new team member, he's going to be joining us tomorrow on F.A.C.E. So make sure you guys are around for that. He was just talking about, VIX being at the, lowest levels we've seen in years. And we are. I mean, volatility is low. Market's pretty complacent. But that doesn't give you the green light either to be necessarily short risk at the moment. But we have to be, cognizant that the markets are, complacent, if you will, and the dollars, as a result is staying a little weak. Hey, Alora wrote in and she said, it's like the market takes out many when hopping into what is expected it should do, wipes gladly many out, and then resumes the trend expected. Nerve-wracking. Trying to understand the wave as not to get drowned is way too many times before. So never ending story and learning. And these are the markets. I want to talk about this for a second because I think it's really important. And I know you have an interview here, Dale. But this is the type of market where it is I like to call it a target trading market. That means identify the levels you want to be involved in the markets and only be involved there. Like if your thesis is, look, I do want to buy dollars on dips, but I think the euro is going to probe above the new highs, before the dollar can resume its uptrend, then, sit there and say, okay, well, I'm going to short the euro on an approach to 110 and put my stops above, 110.20 and say, I'm only doing that trade. If it gets there, try to have a little thesis and trade around that thesis, and then figure out, based on your technical skills and your chart skills, where do you want to be involved? Like if you feel that, this, like I'm just giving you guys an example here, the euro's divergent relative strength, you can imagine intraday we pop up a little bit higher. Well, great. We pop up higher, the RSI gets up towards, the divergent level. We get up here towards 110, then you short it only when it gets here. And if you can do that and you can practice doing that, especially in markets like this, I think it's going to take you a long way. Ryan, Kman, you have any last minute thoughts before we hand it over to Dale?
Not really
Wise words as
today.
always.
No, not really today. But there's one that I'm watching, and sometimes I know you're watching it too. Sometimes, Blake, is the dollar rand. That thing is not giving up, and
Yeah.
I am waiting. If those promises of global dollar sales come to fruition into Thursday, I'd love this thing to trade back down lower, closer to 18, to possibly reload it.
And it's not just the dollar rand. The dollar mex is really respecting some. Yeah, it's respecting some support here too.
Yeah, that was very technical move, it seems, right?
Yeah, very much so. Triangle support, and and again, it's the Banxico actions I think are important. But yeah, you're right. This dollar rand is not backing away, and maybe, just maybe, we'll be on our way to back to 20 if it doesn't back away. I like it. I like it, Kman. I'm going to be watching it as well.
I'd just like to say that the euro taking out last week's high 65, we're trying to do it here. Multiple time frames will diverge. Just saying.
Yeah, I mean, it's trying, right? I mean,
yeah.
and it'll be divergent on any new stub higher. So
that's 4 hour. You could go to any time frame, and it's even 15-minute. So yeah, just if that means anything to you.
It does. It does. Thanks for pointing that out, Dale. Well, hey, I know you have your interview.
Jerry's afraid to be promoted to panelist. You're only being promoted, Jerry, for 30 minutes, and then we'll demote you again. So why don't you accept becoming a panelist? Okay, I'm going to click it. Huh?
Is he there?
Okay. Jerry Robinson.
Got it.
He doesn't want a promotion. He's happy with his current position. And, more responsibility once you're promoted, not always more money. Right, Jerry? Welcome back, Jerry. There, I'm asking it to unmute.
All right. Thanks, Kman. Thanks, Ryan. Thanks, Coach. And have a great interview.
Hey, Dream Team. Thank you, guys.
Jerry? All right, Dale. I made it in here.
All right. Yeah, I know you didn't want to. You refused to be promoted. We should always welcome promotion in our lives, don't you think?
Indeed, of course. I didn't see it. I just saw it now.
Okay. Well, it said you declined the promotion. I thought.
No.
All right. Anyway, it's really good to hear your voice and
likewise.
See you, Jerry. Great time of the year to start looking ahead. Let's see what you have going into year end, and looks like you prepared. Is this your website that you're showing right here? Okay.
Yes, this
All
is followthemoney.com/charts. So this is for
Okay.
our premium members here. But back behind this wall, we have tons of stuff, of course. But this is today. I thought we would just take a look at some charts,
Okay.
and then just kind of discuss some of the key markets, some of the major markets. But I'm happy to address any questions specifically you have. I'm
Okay.
very interested today in the dollar. I'm interested in gold. I'm interested in the NASDAQ. I'm interested in, and of course, maybe Bitcoin as well. But we can talk about anything.
Okay.
But a lot has happened. Yeah.
Everything you mentioned, you're probably bullish, correct?
Let's see. The dollar, not. Silver,
that's right.
gold, yes. NASDAQ,
Okay.
yes. And Bitcoin, yes. So everything but the dollar. In fact,
Okay. Well, when the dollar's bad, you could be bullish at everything, right?
That's exactly right. And in fact, that's part of the reason what's been driving this market higher is that dollar. And for those who are new out there listening, and maybe you're a new trader, and of course, I know you focus obviously on Forex, so I'm not telling anybody anything they don't know. But I know your audience focuses upon that. But the thing to keep in mind is that dollar really does have a great impact upon all assets that are denominated in it. So
Yes.
commodities, or maybe stocks, even bonds and things like that. So they're all affected by it. And last time we talked, we were talking about this particular chart. Let me see if I can zoom in just a bit more. There we go. That's nice and big and pretty. Okay, so that particular chart here, we had said that it was very clear to us that the 106 to 108 level was going to pose severe resistance. It was going to be very tough, and that we couldn't even imagine a catalyst short of inflation staying sticky for too long that would possibly push it up, albeit some other black swan that we couldn't envision. But we did see this historic rally, and I'm sure you know that, Dale, because from July, and July seems to be an interesting month for the dollar.
I called that bottom on Real Vision.
Did you now? Okay, perfect.
Yeah,
well,
that day.
It's funny because the Stansberrys of the world and a lot of the newsletters that are out there back in 2014, they called the death of the dollar July 2014. And that was the mark of a huge uptrend, incredible uptrend.
Yeah.
Well, this rally in the dollar starting in July, we had, I think, if I remember correctly, it was 13 or 14 consecutive positive weeks. I think it was 13. And going back in history, I couldn't find anything similar to it. So this was kind of a scary rally, even though it was fairly muted, and it was still a lower high. This was
halfway
a very
back.
this was a very interesting rally. Well, anyway, it got up here to about 107, and this was it. I mean, this was the crunch time for us, and we said, look, 108's, we can't see how it gets above this. What's the catalyst? And there really wasn't one. It turned out that yields peaked, and predominantly due to a couple of things, but especially the Treasury borrowing amount that came out at was it the beginning of November or somewhere in there? Maybe it was October, but they had put one out. The Treasury borrowing had put one out back at the beginning of July or around in July, and that drove the dollar higher, yields higher, because they were borrowing more than what was expected. They were borrowed like $1 trillion in Q3. But then when they got to Q4, they said, okay, our planned borrowing amount here at the U.S. Treasury for the next quarter is going to be $776 billion. Now, that's outrageous, but that was much better than what Wall Street had anticipated. They were expecting $850 billion. And so when the Treasury said, we're only going to borrow 776, this was a kind of a deflator, if you will, for yields, and we've been seeing it work its magic. So just like,
do you like the bonds longer term? Really, I mean, we haven't really retraced that much of the catastrophic decline. Do you like them?
If I were a bond investor, I would be buying here. I just don't tend to do bonds. I tend to even focus more on safer equities before bonds. But bonds, to me, two of my favorites right here would be, I've been telling our members, TLT, of course, the big giant. And then another one that I like, put out by Vanguard, is the Vanguard Corporate Long-Term High Quality. No, it's VCLT. And I've used that as a cash fund for, off and on throughout the years. And of course, it got hit in 2022, but it looks really attractive as well. So those are two, that I would say would be interesting to me. And I think that we really have hit the bottom, so to speak, on all of this. A lot of this, Dale, you've been through this so many times. We talked about this before. A lot of this negative Nancy sentiment is caught up in two things, at least two things. Number one, we just suffered through 2022. And 2022 was a bruiser. I mean, going back and thinking about it, man, this was nuts. I mean, what we went through, and that people tend to get stuck in a moment. And so just like 2008, when we went through 2008, it was like a meat grinder. And people said, well, I can't go back up in 2009. It has to keep going down. I mean, look, everybody's scared. Well, the market doesn't care. Market started going back higher. And of course, there were catalysts for that. Well,
how do you overcome recency bias, Jerry, which a lot of people suffer from that syndrome?
Just technical analysis and focusing upon the chart. The chart has saved my hide so many times. I
knew you'd give that answer. So there you go. There's a little lesson for everyone when you may have a bias or a view.
Yes.
But check that narrative out with your price action.
Absolutely. Trust the charts. And the other thing is to keep in mind.
They're like your wife, right, Jerry? You have to trust them.
I don't know if I'll say that, but I agree.
All right, anyway, well, you'll have to love them like your wife.
Gotta love them. Gotta love them. That's right.
All right. Anyway,
so the first thing is that recency bias. So there is that fear of, okay, wow, we've been through this meat grinder. How can it end? How do we know it's over? And I'm not going to put my foot out into the water until I know it's absolutely positively safe. That tends to be a new all-time high. Guess what? The NASDAQ 100, Dale, is 2 or 3% from a new all-time high.
Yeah.
The S&P 500 is trading like 5 or 6% from a new all-time high. Can you imagine the shock and awe that's going to come on when the average person sits down at the CBS Evening News and hears the S&P's at a new all-time high? They're going to be like, "What? I mean, how is that even possible? We've just heard it's Armageddon. We've been hearing that it's not safe to get back in the water.
Two wars.
Yeah. 2 wars. Okay.
Yeah. Terrible bond market, everything.
Yes.
Yeah. I think, in a New York minute, everything can change.
That's it. And so the two major reasons why I think a lot of negativity still lingers is that recency bias, which probably I appreciate that phrase because that really is what it is. That composes a large part of it. The other part, I think Warren Buffett teaches us. For a long time, when I first got started in trading back in '96, one of the things that I kept falling for was I was kind of a political guy. And so when my guy would get into office, I would say, "Oh, great," and I would think, "Well, everything's going to be great now." It's idiotic thinking. And then when guy I didn't vote for got in, I would say, "Oh no, it's Armageddon. Everything's going to be destroyed. He's Godzilla." Okay, so that's another aspect of what's happening here is that there's a lot of people who think Trump is the savior and Trump is going to fix everything. And without him, the market has to go down. And that Biden is some sort of antichrist. And now that he's in office, he's out to destroy your wealth. Okay, well, these work really well in newsletter headlines, and they really work well for clickbait. But in reality, a lot of us still kind of cling to those kind of juvenile ideas because it's just kind of human nature, so politics plays a large part as well. I bring up Warren Buffett because he said something a long time ago. I didn't know he had said it. I started saying it, and then I heard him say it. I said, no, it has to be true now that I've heard him say it. And that is, don't trade or invest based around your politics, and I think a lot of what we've seen too has been fear or negative Nancy sentiment saying that, well, Biden can't do anything right. Biden's going to screw the pooch. Biden's going to destroy the wealth. Biden's going to destroy the dollar. And that's just a popular talking point on the right. And if you listen to that and you're an investor, well, it can affect you. So I would say the politics angle and the recency bias, I think, have prevented some people from participating in the rally. Now, there's been certain things that have done much better than others. For example, let me open up our Robinson report. This is a weekend report we put out for all of our members, and I'll come down to the returns, and you'll see here we track 10 major markets, many more, but just 10 major markets for the sake of brevity in our report. And Bitcoin year to date up 130%. Nice. I mean, that's just absolutely outrageous. And then you got Ethereum 75%, NASDAQ, Dale 47%. You could have thrown your money in the NASDAQ 100 at the beginning of the year and made 47%. The S&P 20%, gold 11%. I mean, the big laggards here year to date as of now have been China, silver and crude oil. And then also especially Russell 2000. Russell 2000 we think is probably due for a rally, but I'm kind of mixed on small caps anymore. It used to be that small caps really could outperform the large caps. Today it's kind of a winner take all mentality, and I think you got to be real selective in the small caps. But overall, I think that's another market that's probably going to see some nice rally next year. Also, these interest rate sensitive sectors, real estate, utilities, consumer staples, these are all nailed. I mean, these have all been really hit. Dividend aristocrats, I like that list right here. I think those are good ideas as we go forward for those with a long-term perspective. If you're trading, then you could probably build the case that, in the near term, some of these things are overshot. I mean, Bitcoin and Ethereum probably due for a pullback, maybe even a 10 to 20% pullback before they go higher. So if you're looking for, things that have overshot, maybe that. The NASDAQ 100, maybe not. We see more upside for the NASDAQ as we head into next year. So that's just a quick year to date.
Do you think it's all clear, even though you're looking for new highs, that the bull case is going to hold together through 24? Because I know some people that think there's going to be a couple of rough quarters in the market.
Sure. No, I do think the economy,
or third quarter.
Yes. The economy itself does appear to be slowing down. And even though we've had better than expected GDP reports, we're expecting a little bit of a slowdown in 2024, maybe even just grinding to a little bit of a halt briefly. Now,
soft landing.
I don't know about that. I do know
no landing.
Well, the thing that I'm concerned about is I'm seeing deflation show up in not food, but I'm seeing it show up in a lot of consumer goods, sporting goods, in a lot of the other areas, which is great in some ways because you want that. That's exactly what the Fed's been driving at, is to try to get the inflation to move the opposite direction.
What do you think of this, Jerry? We have deflation in things we own and inflation with things we use.
Perhaps. I would say that's probably true to a certain extent. But one of the reasons I think as we look forward, why we would say, well, how could you be bullish? What possibly could go right here? Well, one of the things that's interesting is the Investment Company Institute, which tracks tons and tons of financial institutions data, shows that there's currently about $5.7 trillion sitting in money market funds earning around 5% on the sidelines. That's between retail and institutional investors. Well, just over the last 30 to 60 days, QQQ, which we just talked about, Q right here, this particular chart, QQQ, which is just, again, so close to a new all-time high, reported its largest weekly inflow in history last week, or the week before, the last couple of weeks. So the largest weekly inflow in history is the week of November 13th. So QQQ, they get inflows, they get outflows all the time. They got the most inflows they've ever received in any single week this month. Okay, then we saw the corporate bond market, two bond indexes that reported their two highest weekly inflows on record in the middle of November. When you add all that up, then you say, well, where's that money coming from? Well, then you go back to the ICI and you find out what the stuff they've been putting out, and it shows that in October, money market funds posted their first significant monthly outflow since interest rates began rising. So here's the deal. You have people beginning to expect rate cuts. There's already 4 now expected. There were 3, now there's 4. So we're seeing a slight adjustment. And then on top of that, you have people who are earning 5% in money markets, and their buddies are earning 50% in the NASDAQ. Okay, you're earning 5% in the bond market or in the money market, and then your friend is earning 20% in the S&P. It would take you 4 years to get what your friend got with sitting in the S&P, just the boring old S&P. So he just quadrupled your 5% bragging rights on your money market. So there's a lot of people who are looking at this and saying, now, wait a minute, 5% is good, but look at what's happening in this market, and rates are coming down.
In fact, 5%, if you're in money market, that goes away as rates decline, and
sure,
the move would be to lock it in, which is what's happening by going for some duration. And you know, it was such a massacre before this recent bond rally, Jerry, that I'm sure there was a lot of massive outflows of bonds over the last year. What if there's some reallocation to lock in these high yields? Could that cause a little less liquidity going into equities and shifting into bonds?
I guess so. That's a really good question. I presume it would. Yeah, I presume that it would. But when you think about that $5.7 trillion sitting on the sidelines between retail and institutional, you think, man, that's just a lot of money that's just sitting in cash. You know, it's just sitting in cash. And so if we start getting a real, you know, move in the markets as rates come down, then you're just going to see people start to, and then you have so many things that you can really build the case they're beaten down. I mean, so not every stock is more part of the Magnificent Seven. Some companies are just trading at multi-year lows, and they're high quality. So they've just been neglected. People have been scared, and they've gone to cash. And so I think there'll be a lot of bargain hunting. There already is starting to see some bargain hunting, but I think we'll see a lot more as we head into the next year. We also have potential that Russia and the Ukraine war is nearing an end. We've been hearing that rumor for a while, but it seems to be gaining speed. We also have a truce in Israel. In Hamas, it's fragile truce. We'll see how long that lasts. We pray that for peace in that area.
Tell us about peace in Ukraine. What are you hearing?
Well, what we've been hearing is that Russia's Vladimir Putin is at a place where either A, due to his health, or B, due to just bad politics, he seems to be wanting to broker some sort of deal. We've been hearing that, though. I got to say, we've been hearing that for a while. It just seems like the last couple of months, those rumors seem to be getting a little more valid. And so I'm very hopeful that we're going to see an end to this at some point, soon. I'm as anti-war as they possibly get, and I certainly would love to see that war end. And of course, the one in Israel and Hamas. The problem is like whack-a-mole. You know, you end these two wars, and then the military-industrial complex will start something else somewhere else. So it's a constant battle. But anyway, gold. I know there's probably some gold bugs out there. You know what, me included, I do like gold for the long term. I think it's a great place for a small portion of your capital as insurance, portfolio insurance is what I call it. Okay. I think it's a great idea. And we're getting ready to see, I think, a new all-time high. Why? Because of that dollar. Dale, that dollar comes down, gold's just going to touch $2,100 probably pretty soon.
Do you like the miners, Jerry? Gold miners, silver miners.
Yes and
cheap,
no,
man. They're very
cheap. Yes, I like them specifically for trading. I don't like to invest in miners. So I two different hats there: the investor, the trader hat. Yes, happy to trade mining stocks, but I wouldn't want to hold them for a long time. But with gold, it's different. You know, I'll just sit there and hold the metal. Same thing with silver. I'll hold the metal.
I like that gold silver ratio chart. Maybe before you move on, tell us what it's saying to you.
Well, this just means that right now that the bias towards silver is still remains elevated. This little yellow line I don't really have marked, but this is kind of an important line in the sand. When we get below this line, it tends to be a pretty heavy resistance. Yeah, exactly. We'll be leaning towards back to gold at that point. But
you say at 50 you would go back to
gold.
You sell your silver and buy gold.
Exactly. And then when we get back up here, exactly. That's it.
Okay. Thank you, Jerry.
Oh, yeah, you bet. And then as far as the dollar goes, I mean, again, we've had lots of talk about the dollar. We've had lots of talk about how, it's going to go higher. We're down at 103 right now, nearly 103.02 this morning. VIX is at 1390. I mean, these are very, very low. Oh, in fact, we just crossed it. US dollar right now, I haven't seen this print until just now, 102.97. So we're at 102.97 right now live. This chart's a little dated, day or two. But anyway, so the dollar is now in 102 range. How about that? After coming up and hitting, 112, or it probably got a little bit higher than that, but about 112 or so.
Last year.
last year. And notice this, what you see here is you see back in 1985, that was the Plaza Accord back then. People remember that. It got really high. That was the peak. And then you came down, and then you got another peak in the wake of September 2001, 120.
Okay.
And then we had this gargantuan inflation and COVID and all of this, and we came up to 112. So again, you can see that this is clearly a bearish channel. And then you can see the lower lows, right? You can see 97 over here, 79 here, 71 here. So we're in a locked in a bearish channel. So sometimes it gets exciting for the dollar because it moves higher, but it's just moving higher in a long bearish channel. So we believe we've hit the peak for this particular part of the channel, and now we're going to move over many, many, many months back to a new low below this 7180. And in fact, that's kind of what we have here, this little range here. We expect the market of the dollar to come back down to its 2021 level, 2018 level, which is, 90 to 88, somewhere in there. And that ride, Dale, as it comes back down, that's going to be really good for assets. So
down it's faster.
So we're happy about that.
All right. Happy about the demise of the currency that we've been, it's going to make everything. Maybe that's the Fed's way of getting out of this debt trap, is just to trash the dollar. Makes it easier. And have it be the sacrificial lamb. What do you think about CBDCs? Do you think they're going to happen?
Sure. Oh, sure. And we need to be impressed by that, because Bitcoin, didn't exist back in say 2007, whenever all the shenanigans were going on. It really didn't get released until a year or two later. And so and so when you think about that, the central banks are old institutions. The Bank of England started back in the 1600s. I think we have a Bank of Sweden is even older or something like that. These central banks have been around for a while. They've been doing their business, and they move at a snail's pace. They're not like really big, fast innovators. So the fact that Bitcoin came out, they released a white paper, and now, less than 15 years later, these antiquated, slow-moving, Titanic type of institutions like central banks are talking about, hey, we need to take a cue from Bitcoin and actually use this kind of technology because it's that innovative, and let's do it now. So in other words, that's amazing that you would have a technology that comes out and within 2 decades would already not only be embraced by the central banks, but they're actually actively involved. You already have banks like China that already have their own digital currency. So I think the CBDCs are coming. I think they've kind of missed their opportunity to shut down Bitcoin. Now they just have to manage it. They're going to come probably after the hardware wallets. They're going to try to do other things, try to get our money into Bitcoin ETFs and away from the Bitcoin itself. There's a really important ratio we teach, the Bitcoin and S&P 500 index ratio. You just take those and just divide them. And this one right here, we were waiting for a cross of 7. That was the peak back in the 2017, 2018 area. And then we came down. This was kind of the bear market for Bitcoin. And then we came up and then we crossed 7. And that really led to a massive rally. We came down and held 7 and then did it again. And then we came down and then crossed 7. And then it became resistance through the whole thing. So we told our members, look, you get a nice big convincing breakout above 7 on this ratio chart, it's likely to confirm the next big bull market. Well, about 5 or 6 weeks ago, this happened, and you'll probably notice that was around the same time that you began to see Bitcoin really begin to break out. You began to see other cryptos as well really begin to move. So we're of the opinion that Bitcoin, which we've been in, Dale, not bragging, but just so your listeners and our members know, we've been in Bitcoin since 2012, 2013. We were very fortunate to learn about it early. We began teaching about it early. Many of our members bought Bitcoin when it was $200,
Nice.
because they just said, I told everybody, hey, just go buy one, just go try it. Of course, going and buying one now is like, buying a car. It's difficult to do now, but back then it was easy. It was easy to buy the amount. It wasn't easy to procure. It was difficult to buy. But anyway, I'll make
All right,
this
so
last.
if we ended up closing back under 7, that would be a breakout failure, and you would
Yes.
get out.
You will. Yeah, I would start to question our thesis. Yeah, I would say,
Okay.
maybe not yet. Maybe not yet. But as long as it stays above 7, I would say that's a very important number to watch, because that is historically. One last thing I'll talk about, because I know we're running out of time, but is the Bitcoin. Well, we use something called the extreme value zone. This has really, really helped me. When you talked earlier about how do you kind of overcome the noise, I use a chart like this to instruct my dollar cost average. I like to dollar cost average into high quality assets. And so what I use is an extreme value zone of 60 to 80% discount. Anytime a high quality asset is selling at a 60 to 80% discount from its previous all-time high, and I'm dollar cost averaging, I will double or triple my dollar cost average into that high quality asset while it's in that range. When it comes back out of that range, I'll just go back to my normal dollar cost. This allows me to buy more whenever things are low, when I think they're really high quality assets. So we have had a wonderful opportunity to add more Bitcoin. When Bitcoin hits a new all-time high of 69,000 or so, most people will then want to back up the truck. We would encourage people who have been buying Bitcoin now while it's been cheaper to think in terms of selling when it gets to a new all-time high, not to get sucked into the FOMO as soon as it hits a new all-time high, which is undoubtedly going to happen. So
it's not a profit till you take it.
That's so true.
So Jerry, how do people that saw this presentation and love your real nice technical work and interesting things that you use for market tells follow you and get involved with you?
The best thing to do would be to go to followthemoney.com, as you can see right here on your screen. And then right here, you can enter your name and email, and you can just join our free list. That's one of the first things you could do. We also have podcasts, so you can follow our podcasts. You can follow our YouTube channel. And we also have a Black Friday sale right now, 50% off everything, whether it's products, courses, memberships, whatever. So if they want to come and kick the tires and try it out, we'd love to have them. And at the very least, they can sign up for our free email and listen to our free podcast. But I always look forward to visiting with you, Dale. I appreciate your perspective and your experience. I respect that, and I appreciate you.
And back at you, Jerry, my trading warrior brother. You bring clarity every time you're here and conviction about what you're doing. I know you have skin in the game, and I'm always rooting for you. And hope you have a great trading season into year end, and let's get back together in the winter.
That sounds great, Dale. All right, buddy. Merry Christmas to you.
Jerry Robinson, everybody, check him out at FTM Daily on Twitter and read his stuff. And I appreciate your time today, Jerry. Thank you, buddy.
Thank you so much.
Okay, and everyone else, you could join the team in 13 minutes on the Morning Edge. Remember, don't just count your pips, count your blessings. You're welcome, everyone. See you tomorrow. Adios. Thanks, Jer.